All right, this morning we are anticipating the market to do well today, and we'll start our analysis by checking on the plus 300 to know what is currently doing. There's a sharp move, fast move in the night or early this morning, so in the midnight, okay? So this is a very sharp move, this early midnight, and it was a very sharp one. Okay, so after this sharp move, we are expecting a corrective structure for the market to go more down. Obviously, we want this market after this down to start pushing up, okay? We need this market to get a very good up move. So, but the market is trying to disguise the structure for a lot of people. But we still follow it, whatever we are seeing. So from now, or currently, what we are seeing is a sharp move down. And this down broke this counter trend line, okay? Whatever it looks like, this counter trend line of structure, we are broken, okay? So one thing I'm sure is that after this down, corrective structure, these are corrective structure forming. So this is the first wave. So the second wave should still come in three wave, okay? So this is the second wave coming in three wave form. So after this down, remember it may want to form a running flat. So that is what it normally does, or expanding flat. But mostly, if market is sharp like this, mostly just give you a running flat and continue going that direction. Okay, so this might be the highest high that this market will give us at this level, and the market will continue going down. Because if he wants to do expanding flat, that means he has to break this high to go more up before coming down. But let's write it on this area. So this is the first up. So this second wave is three wave, 1, 2, 3. So this is the third one manifesting. So if you break this low, the second wave can break this low. Once you break this low, it means that it's going to give us either a running flat or an expanding flat. But if you didn't break this low and reverse up, so we'll now see it as a regular flat pattern corrective structure. So if we go up, it's going to break this high, okay? So it becomes a what? A regular flat pattern. Okay, but if you break this low, that means it wants to give us a running flat. So what is the indication? If this market come down and break this low, it means that next time it's going to come up, it's going to retest at this area, because what we'll be seeing is something that looks like this. First wave, second wave down. If it comes up again, it can stop here, creating a running flat. So this is a running flat. Okay, this is a running flat. Okay, so once it did this, it means that this is a running flat. The next wave can continue down again. Okay, so but if it didn't produce a running flat, it can equally produce expanding flat. This reversal can continue to go up and break this high, creating what? Expanding flat before this wave will now go down. Okay, that is expanding flat. You can see that it is expanding flat. Okay, but if you do not break this low now, this one that is coming down, if you do not break the low and it reverses, that means it will create what we call a regular flat. That reversal can break this high and it will form a regular flat. Okay, so this will be like this. This will be like this. This will be like this. So this is now a regular flat pattern, and the down will come. So, but the point is that this is corrective structure. So either ways, all these are corrective structure. So what we are waiting is if you break this down. So our next target should be here. This high, this engulfing candle. Okay, for the market to continue going down. So that is our first target. Then if it wants to target where we can extend it to this area. Okay, so these are zones that we will now watch out for. Now, another thing we need to do is that because this is a very big zone, we don't need to immediately we see it at this line enter sell. No, we need to see the first spike, okay, on the 1 minute time frame. We need to see the first spike on the 1 minute time frame. Once you get that, the first spike on the 1 minute time frame, we take it down, okay? We take it down. So, but the main down will come when this has formed three wave, 1, 2, 3. That is when the main down will come. If not, Anytime that we come line, we still maintain this second wave. Another up needs to come for the main down will come. Okay, so this is our bias. We wait for this zone. If this market break this low, very importantly, if this market break this low, coming into this zone, we'll be expecting the what? The main down, something like this, something sharp like this. Though it may not be long like this, but just significant sharp before the market will start going up again. Okay, that is our target on crash 300. Then on crash 500, the market is still consolidating. We see that the market really need to go up. For what we see here is a structure broken. Okay, wow. Okay, so while we see the market doing corrective structure, so obviously more down can come. Okay, more down can come before the market will start pushing up. Let's look at it very well. This is the structure. Okay, so we see this down, we see a corrective structure, this down again, which is to say more than obviously need to come so that this will look very nice. Then we'll now draw counter trend line using this high, two highs. At the moment the markets go across the counter trend line, then that up is expecting. So obviously at this moment, more down is expected to come. We can look for a zone at the 30 minutes candle. So we will know where we can target at any of this area. So this is the areas we have currently. So the next available zone, let me clear this. Next available zone is this. Okay, this is the next available zone. Okay, so if the market get there, more down. But if not, even from here, market can continue going down because the market has given us a corrective shape. So if you can take it from here, fine, and go down. Put your stop loss above here. If you can enter from here, just make sure you put your stop loss above this high. Okay, so if you're entering it from here, just make sure you put your stop loss above this high. Then you take the next down. Okay, but if you don't want, you can wait for it to enter the zone. Enter with your stop loss above this high. Then you take the next down. Okay, either way, that is our bias. Can this market decide to just push up without going down? Yes, obviously it can. Okay, it can decide to push up and break this high before going down. Fine, it can. Okay, that is structure. So if we do that, we will look at it as another structure formula. Okay, but our bias currently is the market throwing another significant down before we now choose to go up. Okay. Then crash 1000. Crash 1000 is just forming some, some funny shape, but we have to follow it, whether I like it or not. Okay. So we say this market is supposed to give us a good structure that will help us to go up for this up. Okay. We have corrective structure, this forming corrective structures of circuit everything. So up is expected to come at this crash. But obviously what we're seeing here, it doesn't look so seemingly that up is coming really. But that up, we need to see that if this down happens, that may be the last down that we'll have before the market will go up. So any of these zones here, engulfing candle, any of these zones, especially this one, any of them can trigger the market down to do more down again. And after that, the market will go up. But if they do not, the market can choose to start going up from here and we'll get another. So for this up, we're expecting to see another. Okay. So for this up, we're expecting to see another up. So these are what I think we are expecting from this. I remember what I told you before previously, that we'll have this high. Okay. Say we'll have this high. All these ones are corrective structure. So we are expecting to see a second high on this zone. So if this one push this high, maybe this high can come up to this level, giving us expanding flat pattern, or stop somewhere here. Stop somewhere here. Okay, giving us a running flat pattern, then the market will continue more down. Okay. So, but from where I'm seeing this market, I am on the opinion that the market could spike down again. So, for me, I will be taking a trade at this moment, at this place, put my stop loss above here. So this is what I do. I will take a trade from here, immediately put my stop loss above this high, okay, above this high. Then I'll target more down, okay. I'll target the market to go more down. Once the market comes to this neckline, I am out. Okay, so this is the down I'm expecting. If I can get this down, I am out. Yeah, the market can comfortably go up. If the market decides to take me out on a loss, no problem. Once I see it break this high, I know that the market needs to go a little bit high before coming down. Okay, so I will leave it and target this area. So if I see the market break this high, take me out, I will put a pending order at this junction. Okay, this engulfing candle have not been tested before. I will use it to target this market at this level. So what I will do is that if the market take me out here, pending order is here to initiate another buy, another sell. Okay, put a pending order here, initiate another sell, put my stop loss above here, so that I can ride the next available down. That is for crash 1000. Then this is a boom 300. So boom 300 already has using a shopping move that has a sharp wave. Okay, this is a shopping move, but it has a sharp wave. When this market disguised himself is at this area, but we're expecting 1, 2, 3. So we're expecting another high. So after this high, we think that the market is supposed to go down to break this low. Okay, so the market pushed down, but it did not break this low. Okay, it didn't break this low. Yesterday I saw this very sharp because this fast push aligning with this structure, one corrective structure, another high was very fantastic. So I was expecting the market to continue. I didn't know that it wants to even give us another, it wants to give us several waves, want to give us several wave structure. So what do we see? The market begins to give us a complicating structures at this level. These are complicating structures impossibly, complicating structures impossibly. So what do we see? This last wave did not go as a just one. It did a corrective structure, okay, did a corrective structure and continue pushing. Now, if I should analyze this wave, what am I getting? This wave is the first impulse from here. So we have a corrective structure. This is the corrective structure. 1, 2, 3 is a corrective structure throwing down. Okay. Now the second one we have is up here. Okay. We have another up pushing. So this up now is on different degree. This up we see 1, 2, 3 is of different degrees. So what I see here is that the market corrected 1, 2, 3. So this is a running flat pattern at this level. This is a running flat pattern. This is a running flat pattern. Okay. This is a running flat pattern and the market drop again. This is a three-wave structure. Okay. 1, 2, 3. Okay. Three-wave structure. After that, it did another corrective structure here and push again different degree. So what I see here is something like this. See this, boom, 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 boom. Okay. So now what am I targeting? I should be targeting it. Let me take this low. Okay, connecting this low with this low. First of all, let me connect this first one. Okay, so this first one has been broken. So this is the first impulsive wave. This is a mono wave. So for this down, there should be another down. So what I'm expecting is either this thing throw a lot of down, okay, it has to push up to do correction. So anyway, you can target to see the engulfing candle that will throw it up. Let's check for 30 minutes. If there is a zone here, I can throw it up. Okay, obviously there is none at 30 minutes. So let's check 1 hour. Okay, obviously no, 1 hour. Okay, so let's go back to 15 minutes. Okay, so this down probably need to go a lot of time. You need to go way down. So I think the best place, if I target here, it has been tested before. Okay, no, it has not been tested before. So here is the next target for it to reverse to give us corrective structure. Another place is here. So these are the two places I will target this market. Once I see it here, I'll take it. The reverse, you know, this is the impulse. So the reversal should be a corrective structure. Then it will go down again. Okay, so that is my target for this round. So I'm going to comfortably wait. Already has given us engulfing here, engulfing again. So already I know that this engulfing is a sign that this market needs to go more down. Okay, so I'm targeting it at this level, 1 or 2, either here or here. So that will be my pending order, waiting for this market to push up. Okay. All right, so this is 7,500. Already boom 500 is building up a corrective structure after this, or these are corrective structure of five-wave corrective structure. We check it very well, we can see it here. Five-wave corrective structure. So this is five-wave corrective structure. So, but this is the last wave of this three-wave, okay? This is the last wave. So once it gave us a reversal sign, we'll now take it up from it. What am I waiting for? If I see an import a spike up that engulf and a candle and a turn on it, that is a reversal sign that the market wants to go up. Okay. Another place I can target it and know that the market is seriously buying is when you break this counter trend line, or if this market will give us a corrective structure down to give us more structure here, you can use it to go up. Okay. If not, nevertheless, what we do is that we wait for a structure here. Okay, so let me go to 1 minute and see if I can see the structure clearly to ride with it. Okay, so looking at the 1 minute, okay, this is another structure I can focus on in 1 minute to see if the market will give me a good ride. Okay, so this is another structure. So obviously the market needs to push more down or through up new correction. So either up small, do correction, or go down. So I need to see the structure clear before I will follow it to go up. So 1 minute can guide me on going up, or I will wait for it to give engulfing candle, bullish engulfing candle on 15 minutes here. On 15 minutes here, bullish engulfing candle. Then reverse to touch it again. I will enter for the next buy. Okay, so today this market will give us a nice up. Today, target this market, we need to give us a nice up. Okay, boom, 1,000, 1,000. That is a nice move, wonderful, powerful. There is a very powerful, nice shot at this level. See, this shot is very sharp. Immediately touch it, boom, the market pushed up. Yesterday we saw this market. Okay, so we anticipated yesterday that the market could get to this level and we enjoyed the up move, but no, the market never did. Remember, I told you that if you do not want it to delay, you can enter from here. Okay, and put and push. So yesterday I entered from here, the market pushed up. I take my profit because I'm expecting another down. I took it out. Okay, so you see the three wave, 1, 2, 3, very sharp, and the market started pushing. So obviously after this, you know that this is a corrective structure, another push. This is another area it tested yesterday. Okay, tested at this zone yesterday and spike up again to complete the structure. After that, it came down, and this today he entered the early morning today. It touched here and pushed up. Obviously, can we see any engulfing candle coming or any spike up that may come? Yes, the market might choose to spike again at this level. Okay, it might choose to spike again at this level. Nevertheless, the market can choose to go down. Yeah, the market can still choose to go down. Okay, there is a structure, impulse corrective structure. So market can still choose to go down, and if the market chooses to go down, you can break this low and more down with the same. Okay, so but here you can target a buy, a spike from here. That spike can give us the last high, then the market will start pushing down. Okay, this can give us the last high that can clear out all this high. Then we'll start targeting the market down. Okay, if you check it on 4 hours, you will see that this market has been ranging on 4 hours. Yeah, you see it here. Market has been giving us corrective structure, ranging corrective structure on 4 hours. So obviously, if that high, and you see that it's an engulfing candle here on 4 hours. So obviously, if you enter this zone, possibility for it to spike more up is very high. So it will push up to clear out these highs so that this up will align with another up, then the market will start going down. That is our observation on the boom 1,000. Okay, so let's go back and refresh our page. You see, we have this cash 300. What do we say here? If you break this low and come inside here, we expect a significant down. But if you didn't, anything we are going to see here, that down will be a short move, or it can even break all of them and give us a regular flat pattern for it to go down again. So these are structure, corrective structure forming. The first wave is here. This is the second wave forming. So if this market break up, let me show us. If this market break this counter trend line, okay, so this up went up and broke this counter trend line. Obviously, this structure as this wave has ended. So you see that it didn't break it. So you want to complete this now by getting below this level. So if you do that, we are expecting a running flat. So if you enter this zone again, because it's going to come back to this zone, if you enter it again, boom, will go down. All right, so we are monitoring. See the crash 500. I told you if you can enter here, put your stop loss above here, that will be fine. You take it down. If not, you can wait for it to enter here because it may come here or it may not even come here and go down. So that is why I say if you enter here, put it above here. That's fine. Crash 1000. Remember what I said? Either you enter here, put your stop loss above and take it down, or you wait for the market to come to this level, then you enter for the crashing. Okay. Nevertheless, the market can even choose to break above here and use this one. There are another engulfing candle at this level, can use it to do it, to go down, or are still good. Okay, so we are on 300. Yeah? Remember what I said, the market is targeting downward, okay? This zone or this zone can be a good place for us to buy. And the boom 500, the most sharpest trade for today is boom 500. So wait for it to give us this. I started spiking. So if you give us engulfing candle and that engulfing candle, this bullish, let's say this bullish candle now came and engulf, it remain about 9 minutes for this candle to close. So if this bullish can spike again and engulf this, obviously you can see something here. There is a wick below. If it engulfed it, it means that there is a serious rejection here. So if you engulf it, then you know that the market will start going up. But if you can wait for it to return on the engulfing candle on that zone, then that will be good for you to continue buy. Don't miss this bar. This bar is the trade of the day. Don't miss this bar. Boom 500. Don't miss it. It's the trade of the day. Possibility for you to get long up is coming. Okay, don't miss it. That is the trade of the day. All right. So thank you for your time and utilize this very well so that you can be able to maximize a wonderful opportunity at the end of the day. Thank you very much. Have a successful trading time.